The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. As you just heard, this is the Monday edition, Monday, May the 14th. And fascinating opening. 3 times we went down to those lows, and this is let's go through the numbers. The Dow is down 95 after breaking the 12,750 low, so 12,700, very important low, but as far as I'm concerned, it's the closing price. If you're looking at a daily chart, you've got to wait for the end of the day. Why do I say that? Because there are so many signs that say on this 9th session, having 7 out of 8 close low. Actually, let me go 1, 2, 3, 4, 5, 6, 7, 8, 9. No. Yes, it's the 9th session after the peak on May the 1st at 13,338. And we've had only one little white baby candle right there. And we've had a number of ChapmanWave Roman candles. Those are the candles that open at a certain price, spike fractionally higher, like a couple of pennies or something, drop sharply, just like you saw on the 8th of May and the 9th of May, and then close halfway or above halfway of the entire candle. Make a long wick. If you break that by 50%, that wick, the following session, just a really good chance that you are going to, within a day or two, a bar or two, go and test the low and probably break the low. We've just done that again. But the difference is that we went to 12,000. It's so interesting. Over the morning, I like to just type in whenever I can, whatever it is, because it's very important to me. I typed in 12,698. Then I had to type in 12,696. Then I had to type in 12,665. And now the low is 12,661. So it's going to be really interesting. 661. I'll type that in. Might have to change it by the end of the day. It's okay. It's no problem. I just want to know where we are. And that's going to be very important to see whether or not the Dow closes above 12,710, especially if it closes sharply above it. Why? Because in these, let me just go, if you're looking at Tiger TV, how can I do this so that it's very clear? I've got a lot of information there. I didn't want to get rid of that information because it's part of the education that I like to give to my subscribers of my opening call every single day. I always show this chart. I show the inside wedge. I show the left side, right side price time match. We've just made another left side, right side price time match to the exact day. And so it means it's really important to be able to look at these things. I'll probably erase a whole bunch of this to make it a nice clean chart. Let me just go to the Dow with the technicals, with the stochastic and the MACD. There it is once again. This is with a black background. I like to use the white background when I would like subscribers to print out because it's an educational process. Now look at this. From the low of 12,734 on the 6th of March, you went to a high of 13,289, made a kind of a V-shaped recovery to a fractional new high of 13,297, only 8 points higher on the 2nd of April, then plunged down to the 12,719 area, 550 point decline, very quick decline. But if you look at the pattern, the expression always is you come down quicker than you go up. And I say no, only in the bear phase of any particular move is that true. Look how many charts make an equal move to the upside and then an equal move to the downside. In this case, yes, it was slightly quicker, but not that much from the low of the 10th of April, 12,719 to the high of 13,338. And that took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, and now we've taken 9. So obviously this move down was quicker. So far it's a little bit steeper, and the low is 12,661. Now what's really key about today's action is, what does it do to a number of charts? So let me just do this. I'm going to show you the weekly chart right here. We've taken out the left side low bar, but we haven't closed under it. The week is still young. But I've been making a big deal, and one of the reasons why we are short the Dow is because the MACD and stochastic on that last high completely failed. The stochastic was way down under 80%, up in the 65-70 area, 70% area, and the MACD failed. The fast-moving average, that yellow line, failed to get above it. So to me, that spelled a very high cautionary moment. Why did I say cautionary instead of signal to sell mode? It's because I needed to see whether or not we would take and close under the 12,710, the low of the week of the 13th of April. Why? Because this oval pattern can actually turn out to be very bullish if you do not take that out. If you turn around and you start to go to the upside. Now, what's really important to me is that the monthly chart is starting to test the 9-period exponential moving average. First time it's done that in almost a year, since October, when it went to 12,404 low and 12,284 high. Since then, it hasn't even come close to the 9 EMA. Here we are, just about to touch it, but the stochastic in the weekly chart is terrible, and the MACD. But look at the monthly. Monthly is still holding at 94%. To me, looking out at this particular point, I still have to contend with the fact that well over 80% in the 90% is really good action. Hey, this is the midpoint of May. We've still got another 2 weeks to go. You cannot tell what's going to happen. Now, I'm going to emphasize two trend lines. The first trend line is the left side to the right side, price time match we've made exactly to the day. Just had a drink of water there. 12,734 low of the 6th of March in the Dow. 12,790 on the 10th of April. And you get an exact number of days from the left side to the right side to today's action. If we close decisively under this, if we close into the 12,660 or lower area this afternoon, that's going to say to me that the stochastic at 15% is like the stochastic when it was up and holding in the 85% area. That was very bullish then. That would say, hey, be careful because you're now in the sell zone, and that's not good. And until you get back above 20%, that's stochastic saying, be careful. The MACD is still expanding, so we're going to have to see what happens by the end of the day. So I wanted to do that just to give you an idea of what's going on in one of the markets, and that's the Dow. Now, the SPX.X, that's the S&P 500 index, has broken below the 1340.23 low, just as the Dow has done today. And that was the low of the 6th. The low of the 4th was 1357. That was quite a bit higher, unlike the Dow, which was right at that same left side level. And now we've gone below it. I shouldn't say we, but the S&P has gone below it. It went to 1336.61, and you've got this stochastic, which is starting to flatten out, but it hasn't given any sign yet of turning up, and the MACD is still expanding. That's why today's close is very important. Now, that means that the weekly chart has a peak C, and we discussed this today, on Friday, I think it was, that there's a chance that this is what's called in the ChapmanWave, and it really is way too far down. If it was 1422.38, the high of the week of the 6th of April, and then say 1420.10 or 1419.70, I'd say great. But everything about this is it really does look like a peak C1, and then a failed pattern with a peak C2 lower, and that corresponds to the negative action here. But C1 and C2 turns out in the end over a period of time to actually become very bullish if certain levels hold as support. In my case, I'm looking at the doji candle, two doji candles. The one we're testing right now of the week of the 10th of March, 1335.92 was the low, but the more important one is the one of the 27th of January, week of the 27th of January, 1306. So that's quite a way down. That's like 380 points on the Dow to the downside, 30 points on the S&P. So if we can hold in here and If Friday afternoon at 4 o'clock, somehow or other, the S&P is able to close above the 9-period exponential moving average, let's call it 1368. It doesn't even have to be by more than a penny or two. That, to me, would say sideways consolidation, rotational correction is continuing. Just be very careful of individual stocks that have had huge run-ups. They're the ones that have been most vulnerable. So, and the weekly chart made the slightly lower low so far this month. Last month was just a tad above the 1419.15 high of March. So this is these three highs in the monthly chart are absolutely something to watch, but the stochastic still at 91%. Well, let's go on. Let's go to the Qs. 1, 2, 3. Let me just swing around here to see. I didn't even have a look. I'm sorry to my wonderful engineer. I didn't look around to see if there were any callers. No callers. 877-927-6648 is the number to call. All right. The Qs are retesting. Now, this is really fascinating to me. The weekly chart made a peak E. The Dow has made a peak D, and the S&P has failed. It's got that C1, C2. C2 meaning slightly lower, at or lower. It did not make a new high to peak D. But what we're looking at is that the falling X formation in the Qs, MACD's terrible, stochastics way down to 57%, but the weekly chart, having made that G/B, is still holding way above the 61.91 9-period exponential moving average plus the up channel. Wow, I tell you, the market is always such a fascinating animal. There's always a conflict. You're like unison for things, but they'll never give you unison. Now, it's really important before we go to a break. So the Qs have held the 63s. That's most important. If the QQQ Trust breaks and closes any day this week under 60, 62.50, somewhere around there, to decisively break on the left side low bar, that's a big negative. So far, it's trying to make some kind of a cluster formation as support. IWM was acting very poorly, but it has just broken the left side low bar, holding the 200-period exponential moving average. Once again, we're going to watch the close today. We're going to watch the next 2-3 days, because if the IWM monthly chart is looking poor, having gone under the 9 EMA, if the weekly chart of the IWM Russell 2000 ETF closes under the candle of the 27th, if it closes under 77.27, this is the IWM I'm looking at. It's 77.92 right now. That'll be very poor and hint that the monthly chart is going to be quite ugly. And now we want to let's go to the TLT before we run out of time. So let me run the numbers. The TLT right now is 121.22. It's up $1.72. This is leg D up. The weekly chart is in that trading range, that whole trading band I've been talking about for a year. No, not a year. Yeah, it's almost a year. It wasn't a trading band then. Since September of last year, we've been talking about that peak E that was made, and then we went to a low of 109.82, 125.03 is the high. We'll be back. We'll go through the numbers, and we'll be back with Mike in New York straight after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we're looking at the Dow down 86, S&P down 10. This is really a fascinating period because we've got leg E up in bonds. The 120-minute chart has got A, B, C, D, E. It's leg C up, so that still says bonds are going to go even higher in the weekly chart because it's broken out. And in the TLT, and we go to our first corner in 1 second. The TLT right now is in the channel that the rectangle trading band that I've discussed for so long, that has an upside resistance in the 124 to 125s area, and 109.69. 109s is the support, and all it's doing is been trading in there. But that monthly chart says that if the TLT was to decisively break above 125.03, that's the monthly chart. 125.03 was the high back in October of this year. We could get quite a bit of an extension, a one-to-one extension to the upside if there's no double top. So we're going to be watching this really closely. On a very short-term basis, my VIX index said extremely overbought. That's the VIX itself. Just on a very short-term basis, because the 200 period exponential moving average resistance is right at 2164. The high today was 2167. Now it's pulling back to 2121. Staying in the 20s means that there's downside pressure. The moment it goes back into the low 19s to 18s, the selling pressure. Remember, I've spoken about this for a year now at least, that VIX index is really, really important. So let me go to Mike in New York, waiting patiently. Hi, Mike. How are you?
Good, Basil. Could you have a quick look at Dick's Sporting Goods, DKS, and then, if you have some time later, the auto suppliers like Advanced Auto, AAP.
AAP, okay. GPS, I think it is. Okay, so good questions. Number one is we spoke about this the other day, Dick's Sporting Goods, and I said it looks like it needs to pull back. I was a little concerned that the weekly chart, actually, I said that I got a little chutzpah using this because I drew something that looked very much like a Gartley pattern, but actually all I was really doing is joining triangles to my peaks, and what happened was it went to a doji high on the week of the 27th at 51.58. It's trading right now at 48.01, down 30 cents. Most importantly is that the stochastic was pulling back. It was holding real well when we spoke about it, but I said there's a good chance that they're going to cross negatively, and I'd circled the two high bars of last month and this month at 51.58 in the monthly chart with that 2-bar high miss that I talk about very often. And what happened was this month so far we've seen a high 9 cents lower. It doesn't look like much. In fact, most people would not even notice that there was a lower high bar. But to me, that's very important. But the MACD and stochastic are still holding real well. So are you doing anything with us right now?
No, I'm short. Earnings are tomorrow.
Oh, that's right. The earnings are tomorrow. Whoa. Are you short in the 51 area?
No, I'm short, a point higher. That's
so 50.50. You're in the money. Okay, this is always so difficult because it's the response. It's not they can turn around and say they're fantastic things in the market, and the market drags them down because it just wasn't good enough, or they can say it's whatever it is, and the market thinks that's unbelievable, and they can spike it really high. As I'm looking at it right now, this is what I'm thinking. If there is good news in the stock, it could pop to, I'm not sure it can pop to a new high to 51.58 because it's at 48.04, but it could pop to 50.57, 51.10. I'm just not sure it's going to make a new high, number one. Number two is if there is anything like the hint of bad news, then the 46.26 20-period moving average, this dashed line in my weekly chart, if you're looking at Tiger TV, that says if it pulls back and closes under 46 by Friday, the MACD will turn negative, stochastic will drop to about the 76, 77 area. All of a sudden, the 43 level on the 9-period moving average in the monthly chart will be a target. I think you're in the right position. How you handle the trade is going to be very important. Two reasons. One is, if we are making some kind of a short-term low because we've tested the left side low in the S&P and the Dow, so there could still be another pop to the upside, even though I think that the trend is down. I don't know how it might be with the market suddenly moving up on Wednesday, and then you're stuck with a stock that explodes. I'm going to think through how I would trade this if you have enough to have two positions. So hold on, Mike, and we'll come back and I'll give you the answer as soon as we return. Okay, down 69, S&P's come back to a -8. I'll be right back. Basil Chapman, 877-927-6648. Hey, this is a great day for calling in. Call in.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians. I'm just checking the futures right now. 1333.25 was the low. It went underneath the... It had closed on the left side, right side price time match. This is you can bounce into the arch formation, but it's absolutely critical in the E-mini futures how and if they're even it's possible for them to touch 1351.00. If they close above that, you can have a very quick run to the recent high of 1363. Why? Because we've had a sideways trading range, used a lot of energy to the downside. So it's important to see if we're going to close at 3:10 this afternoon towards the upside of the trading range today, or we're going to just roll over and close right at the lows. It's going to be a really important session. So we're on with Mike in New York. We're looking at DKS, and this is what I was thinking. There are 3 levels that I'd be looking at if there is a pop. Now, it happens to be, are you going to be around after hours? Is it after hours tomorrow that they give it, or in the morning?
I think it's in the morning.
It's in the morning, so it's before the market opens. Okay, now because this is what I was thinking. If you've got a couple of positions on, you're able to treat it as a few positions, I would put a stop on one position just above 48.72. It was the 120-minute high of 130 on Friday. And if that way, if there's any pop-up, it'll absolutely take that out. But more importantly, on your position, can you see the peak C1, C2, C3 that I've written?
Yes.
Well, that is a 51.58 high. Look, 51.58, and that was on April the 27th. Yeah, April the 27th. Then 51.49. Let me just type that in, 51.49, fractionally lower, but all the time, you look at the stochastic, the MACD, they're lower and they are lower. And that says, it's starting to fail with a double top, and then it makes a triple top at 51.45. Each one is just a few cents lower. So I've got peak C1, C2, C3, and 41, I think it is, yeah, 45. And at this particular point, you've got the MACD and stochastic totally failing. That says to me that there's internal weakness now in the stock. Now, I don't know if you've done any fundamental news. I don't know what the expectancy is.
My hunch is that they weren't able to sell winter jackets, and that might hurt. So that's just my hunch.
Okay, so let's go with your hunch, and this is the way I would trade it. In the morning, if they suddenly have these fantastic earnings and it's really up 3-4 points, well, that's going to be up in the 51. Well, it depends where it closes today, but it'll be in the 51 and a half, maybe even 52 area. I suspect that even a very big gap up from the way I'm looking at the daily chart should still come back and do some retesting into the middle of the range, into the 51 to the 49.50 area. So I'm suggesting keep one position at least. What you might want to do is you could decide you take a little bit off now, reward yourself for a nice trade, and that could be part of the kitty that you use if you were wrong. Two things that I would do. If it gaps down immediately, you've still got 2/3 of your position. So you, depending on the market, you could add that back on a bounce later on. So you're at least in the position, and you've protected yourself because you know that I would probably say I'd use, well, I know what you can do because it's pre-market and anything can happen. It could spike up, and by the time market opens at 9:30, it could be back down. But I would give one small position a little bit of room because there's a chance that it could even double top here with the market. The market's not in a very strong position right now. I think you're right. I think you've made the correct choice. It's just how do you manage your money if you make a mistake? And my suggestion is, because it's earnings, if there's a rally, I would probably take a little bit off now, just reward yourself and keep at least 2/3 on and have that 1/3 ready to put back on. And I would say I'd probably look at to put it on unless it closes somehow at 52.50 tomorrow afternoon, because it's just spectacular news. But going forward, I don't know how they can, talk about fantastic outlook going forward at this particular point. I think you're right. So it's how do you manage your money, and the way to manage it is to maybe take a little bit off, add it to your kitty, that if you're wrong, it's there, and then you can always add that little bit back. Or you can just say, you know what, I'm convinced they're not going to do well, and I'm just going to make my stop, and at least half of it, say 52.30. You know what I'm saying? So
I hear you. The other stock I'm looking at, AAP, Advanced Auto Parts, which that group dropped in forever. That looks like it's starting to crack.
Oh, I spoke about it, and I never got it. It was off my list, AAP on Friday.
It's the first day. I mean, it's not.
This is the first day that it's capped down, right? This is the first day of evidence that is. Well, you see, what I've been talking about is when the auto sector, this is the auto parts sector, which has been the absolute strongest for a long time, starts to break down, it's going to be telling us, like copper is telling us, it's going to be telling us something about the economy. So it's going to become very sector selective. Now, AZO is holding in, but I suspect from the chart pattern I'm looking at that AZO, which is at 382, is going to have a bit of a pullback, and that it could hit 75 and then start to fill the gap between 371 and 367 over the next few weeks. So I think you're right looking at that, and AAP tells me that they're going to start rolling over to the different stocks. This is peak F in my weekly chart, peak D in the daily chart, and peak D in the peak D in the monthly chart, and a peak D in the daily. I think you're right. This is the next sector that looks like it could start to pull back.
Okay.
Good eye.
All right. Thanks for your time.
Saying, and AAP has that left side, right side. Oh, look at that. It's coming right into the target. Yeah, the target would be if AAP, which is at 84, gets under 83.95, that's the gap from the 16th of February, then at least part of the 80.22 gap is going to be filled. Try to have a bounce maybe and then come back and test it. 76 is the 200 period moving average, and it hit a high of 93.08. So I'm looking at this and I'm saying, okay, maybe you're the next sector. Good eye.
Okay.
Thank you, Mike. Thank you for calling. So, folks, yeah, you had a question? Go on. In the this is what I want to look at here. High-grade copper. High-grade copper is pulling back underneath the left side low bar of the 16th of April at 3.5775 then, and now the low is 3.5510. What does that mean? It means that the down channel. Now I'm actually going to set. I've been asked so many questions about this. I'm going to set up a course that describes how you can use any two, either trend lines or arch, left side, right side. It just you can do the. I'll do the ChapmanWave. You can do fibs. You can do anything you want with it. It has everything to do with how do you use trend lines. Can it be a horizontal left to right side? Can it be a channel? What do these two channel lines mean? This is the inside track. What does it mean with the red line here when you break below it? It means be careful, because now the resistance is becoming, the support is becoming resistance. Looking at the left side, 3.5775, that says to me that copper has to hold this down channel support in the weekly chart. Let me just draw it incorrectly. Right there, to there, to there. And that says that if copper this week on Friday closes under 3.49, not good. If you look at the euro, EUR-USD, the euro dollar currency pair, arching around. Now, remember the TLT? These patterns repeat over and over and over, whether you're looking at them going up or going down. It took me a long time to realize that the chart patterns and all the work I was doing to the upside actually applies to the downside as well. Not always 100%, but real close. So look at this. This is like the TLT upside down in the euro-dollar currency pair. And what is it doing? All it's doing is saying, I didn't like that up. I've been up in this higher, this upper half of the rectangle for so long above 1.3, I couldn't take it. I now have to test the support and maybe even go down to 1.2622. Now, that's going to be very important. Why? Because we're looking at the monthly chart. The monthly chart says if it gets into the wick of this candle, which it's already doing, the candle of January, that 1.26 is a level to look at. But you can't rule out 1.24, the 200-period moving average, plus we've extended the right side, the left side, right side of these two bars. Remember, I'm teaching about two bars, how you can use any two bars in a specific way. Those two bars, and let me change the color so you can see them. The left side in the euro-dollar currency pair from October of 2008 at 1.41 went up to peak C minus, never good. Comes back down, makes a lower low at 1.21 back. That was in June of 2010, rallies up to a B minus, lower than the peak C. That's never a good sign. Makes the M formation. I even typed it in back in October of 2011 at 1.38. Look what it's doing. It's coming back down, and it looks like it wants to test the 200-period moving average, taking a little bit longer than the left side to the right side in the monthly chart. So that's very important. Look at that up channel that was broken. So those two trend lines and the arch formation, left side and the right side, or the cup formation, left side to the right side, is going to be really important. Now, here's the other thing, the dollar. The dollar's breaking out of the daily pattern in leg C. That says it should go to a leg D. It tested, 80.74 in the index was the high of the 15th of March. 80.69. Hasn't quite made it in the daily yet. So we've got the cup formation in the daily, but look at this. In the weekly chart, this is the week that says, hey, be careful, because there's a left side, right side price time match, which could take us this week close to the 81.74 level, 81.78 level, that high of January of 2012. So this, and look, the stochastic's improving, not great. It's only at 55% in the weekly chart, but look at that squash that we've got here in between the MACD and the stochastic and the daily. That's very positive. That tells me that rallies are going to be transitory at this particular point in the Dow, so that any rally at this particular point, you're going to be able to say, this should fail at some point pretty soon if there is a counter-trend rally, and you have to treat it at this particular time and say, I believe that the trend is to the downside, that the tide has changed, at least for now, because of the weekly charts action and certainly the daily. There could be a bounce. What does the bounce say? 12,915. It's at 12,730 right now. 12,915 to about 12,970. That's 12,970s. That's going to be tremendous resistance in any counter-trend rally. But if at any point this week, who knows what it is? Maybe Greece says, magic wand, and all of a sudden everything's just hunky-dory. We might get this sudden up spike into the 12,990s to 13,000 level, and we'll have to monitor it at that particular point. But there are so many stocks. I went through the IBD top 20, actually more than top 20, again, and I have to tell you, there are just so many stocks that are starting to pull back after having a spectacular move. So I wanted to do that, and then there was we got I had an email, I forgot about it, and the email is question was I can't find it right off the top of my head. The VIX index. Can you show us the VIX index once again, just to see where it is in the context of what you always talk about in the weekly chart? The weekly chart, here again, this is what I'm going to be teaching, that left side to the right side. I typed this in, it must have been at least a year ago, and I showed that there was maybe 6-7 months ago, and what I said, there was a 14.27 low in the volatility index in April of 2011, week of the 22nd. If you go to the left side, right side time price match, I'd said right here, by the week of the 23rd of March, we should be testing that. Well, it turns out, it was 1 week earlier, it went to 1366. Now we've got leg B up. And if in this doji pattern, I have a particular technique that I use for dojis, just a couple of dojis that I use a lot. In this particular technique, if the week it closes above the high of last week, 2159, that says even if it pulls back, be careful. You're going to be going higher in that volatility index, and 2355 is the resistance there in the 200 period moving average. Today we've just pulled back from the 2164 level in the VIX, the daily VIX. Now here's the big thing. The monthly charts. And in this particular case, the monthly, yes, Lorna, I'll look at UTX right now. The monthly chart is saying, look, we just snuck under that rectangle into that area that says be careful, because if you only hold there for 1 or 2 months and then you start to move higher, you can have a sudden up spike. That's exactly what's happened. We're breaching the 9-period exponential moving average of 2109, I think it is right now, 2111. So we've got to be careful. There's a lot of evidence to say consolidation is still taking effect, and when I get back, we will look at UTX, one of my key stocks, one of my Dow indicator pilot light stocks, not doing well. Looks like it's in a test 72.26 and at 75.97. I'll be right back straight off this. Basil Chapman, Dow's down 95.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I was asked by Lorna in the Den if I would look at UTX, United Technologies, trading at $75.98, down $1.20. I've been very concerned that my pilot light indicator stock in the Dow is just making these this dreaded H, the pattern that I call the dreaded H that turns into an M pattern. Now what happens when it breaks under the 78.35 low of April the 10th, it goes way under it. It didn't even have the power to go back. That would be the rule of thumb, that M turns out to be a short-term positive with a break underneath, and it tries to get back into, well, it did kind of try to get back into, it went to 78.08. It couldn't even get it. It couldn't even do it. And now it's made a lower low. That says to me, I've got to now look at the weekly chart, and the weekly chart is still very negative. And if that's the case, you've got a trend line right there. I think it's breaking. Yep, it's very close to breaking. That says to me that if UTX in the next 2 days takes out, so the low today is 75.65, so 75, if it takes out, wow, 75.16, yeah, 76, the low of the 13th of January. Then we're looking at 72.28 as the 200-period exponential moving average. That whole area between the low of 71.60 on the 23rd of December, the week of the 23rd, and 70.41, that whole area becomes its vulnerable phase, because that's where it has to start holding. And then in the monthly chart, you've got the potential for that pattern. There are 2 conflicting patterns. Well, 2 of them are bearish, 1 is bullish. 2 of them says that the dreaded H pattern could mean that it's starting to pull back, and that if it takes out, as I say, that 73's support, it's at 75.97, we might see a complete retracement to the 69, to the 66, 67 area over the coming months. I don't want to see that. And the ChapmanWave inverted falling axe formation over here, these two trend lines says if it closes underneath, you've got to look at the left side low bar of 66.87 as a target. That's just the way it works. So the conflict is that it needs, at the end of May, to close over 79.21 without breaking down into the 73s. And that would say, great, now you can try to worm your way back to a leg C above 87.50. So what would I do? If I was long right now, I'd have to say put in a tight stop. Even if you get stopped out and it bounces, it's still going to have to do a lot of work to test. So I would not let it go under 75.65. Wow, 75.33, and I'd say, yep, it's getting real close to a bounce, but that bounce might only take it to the 77.10, 200 period simple moving average. So I'd be real careful. Some part of your position must have a stop. If you are short, that's fine. Then I would say 78.20 would be a buy stop on some of your position, and the moment it goes to 73.90, some part of your position can get lowered all the way to about a 1 point buy stop, so that you can just move down with it, and then the other part you can just keep your position for now. So I hope that answers your question. Now, I had a question about the GLD. The GLD, I've just dismissed it for a while. I've just said I see nothing in the GLD. Gold is going lower. It's in a sell mode. Made a peak F-top in the GLD. That's the Spider Trust. Trades at a tenth the price of gold. I just see nothing there. But if it starts to break and it closes, last week I said if it closes under 155, did I say? 153.50 or 153.80. It closed actually at 153.24. That says be careful, because the left side, right side price time match says that by the 15th week of the 15th of June, it's going to be testing one buy. It doesn't have to be on the date. It could be before that. 148.27 is highly vulnerable. If it does that, besides the fact that this is the first time in 2 years that it's broken the up channel I've spoken about for ages, that's saying gold can rally, but it's basically in a sell mode. The tide is turned and it is dropping. And I've got a left side, right side price time match. Well, we'll see if 148 breaks. But if 148 breaks, it could go down. It could go down a lot into the summer period. So thanks for being here. My service is the opening call. Check it out. 2 weeks free. It's just a really comprehensive look at the markets. Stay tuned for Larry Pesavento.
Are you looking for a precision edge?